Gentlemen, hey, how are you? Yes, indeed. So here we are, Bitcoin dollar. I've taken the Bitstamp version of this. So what tends to happen is when you're in a really tight squeeze, you start to drop down the time frames. You're looking for the action. When volatility gets very low, the action reduces. Look at this period over here, which was, by the way, an upside HVF that then gave one of the first indications of a whole new upside trend after a recovery. By the way, Bitstamp aside, many others actually made a lower low at this point. So this actual bear market. I've done two time frames for you from the high one. I've done one to the first final low, and actually on other exchanges it actually dipped lower here. A little bit of a schizophrenic candle on many of them, and that was here. This is a weekly chart. So on other exchanges it was up to 91 weeks, 637 days, gents. That's literally 1.8 years versus 413 days, which is just through a year and a bit. So you've got a year and a quarter, and you've probably got a year and virtually 3/4 plus. And what are we doing? We're doing the big time scale view. So when I'm saying to people, we could sell off, and there is a chance that if a target is made that you actually see 3 grand instead of a number starting with 4, it could overperform, in fact, to the downside. It could not make that target, but just break down and maybe get supported somewhere in the 4s or even 5s. All those eventualities can occur, but our overall interest is there's an impulsive move coming, and which direction will it be? And as a result, that's the line of research, and this is where we're hanging our hats. By the way, on that point, tonight, 19:30 British summertime, great webinar for you. Going to go over a number of interesting things. Also, in the event of the crypto market shrinking down, there is one crypto coin we will be giving you that could lose 2/3 of its price and could be shorted. In other words, if you sold $10,000 worth of it and it is sufficiently liquid, you would keep 6,600 even after you've closed your short. Scale up or down according to your money management principles. We will be giving you that coin at the end of the webinar, as well as an offer. So it's for traders. It's not for everybody. It's for people that own their own outcomes. We could be wrong on anything, and we don't have a clairvoyance on our side. We have a probability and a method-based system. And by the way, on that lose 66% of your market cap call on an already hammered coin, so it's quite a brave potential call. There is also the scope for very tight risk, so the amount you need to risk to get that element will be sufficiently lower, significantly lower. I'd put it at a 1:7 to maybe even low double digits risk reward. We're still waiting for that pattern to form. I will be releasing that tonight at the end of the webinar. We'll also be covering how you can make money shorting in a market when the trend turns, how to recognize that, it's not what you make, it's what you keep. So keep an eye out. Anyway, back to Bitcoin in a big cycle. 2014, many people do 2014 analysis, and I keep getting it put in front of me. And the one key theme and mistake that people do when they do this is they think that 2014 will 100% give them the answer to 2018's current predicament. I'm afraid it won't. All it does is give you guidelines and approximations of time frames. There will be some similarities, and there will be something that will be different. In my overall perspective, blockchain and cryptography is not going away. Tokens aren't going to go away. And there are expansive phases, there are contractive phases, there are consolidation phases, and then they'll be back to expansive phases. So those that stay in the game are going to do exceedingly well. And you can go and look at my YouTube, and it's almost ironic now why I say crypto is not a bubble, even though it was hyper-inflated. Bubbles are generally for things that have no value, and unfortunately they've crept into everything, property, etc., even tech shares. There were certain .com shares that were nothing and deserved to go to zero. Tulip mania was absolute hype and deserved to go to zero. Crypto is not going to go away. It's an Amazon that will get overvalued for where it was at one point, go back down to $9, but in decades time could be in excess of $1,000. So that's a hypervaluation, not a bubble. Bubble is something completely vague. Anyway, I'm digressing. Go watch it. It's on YouTube. Crypto's not a bubble. So the overall view is expansive market. However, don't call the bottom too soon. People spend too much time calling the bottom. So what have we done? We've done some time frames. We've said, okay, last time, if you want to use the previous data and recognize that it doesn't have to be the same, it can be in parentheses, approximately. It's going to have its own signature, its own level of data point that it'll tap out at, but it will be unique in its own way and similar in some ways. So history rhymes. So if you were to have those time frames projected from our highs here, you start to get the final low in if it does reflect 2014. And this is what many people are uncomfortable. If they want to use the 2014, ask yourself this question. The first possibility for the final low being in is actually in the new year. It's the end of Jan. So you're talking essentially beginning of Feb next year. That's the first possibility, and that was on this platform, and I'm telling you that actually it did nothing largely but dovetail and churn, and actually made a lower low on other platforms here. Bitfinex, many of the others that were around, you dipped lower here. Now that was 91, so you had all the way through to, if I project it from your highs, September of next year. That's almost a year away, gents. So somewhere between February and the September next year, you could have a bottoming out period. That doesn't mean you were up and it was pumping. No, that just meant it stopped going down and it made its final low. And you could have sat through a year of minor sine wave like this, that dipping a bit lower and there. In actual fact, if you take the first clear up move that then set up the first major continuation pattern and then began a series of higher highs and higher lows, you could only seriously say, yes, this is already higher, so if you hodled all the way through that, you would be slightly up from the absolute lows. But from this point over here, 23rd May, now if I added that to this, you would actually be well into 2020 once you've kind of made some higher highs and are not losing money. That doesn't mean you're pumping. That doesn't mean you're 3xing, 10xing, and 22xing like we did in 17 if you were in on the lows. Some even trade $690, some in 700s, and you ended at 19,000 going on 20,000s at the end of the year. In other words, you need to understand the natural cycle of markets. So you could have lows in somewhere between that range. It could be a smaller bear. We could already be at the low. Mike Novogratz could be right, and we could break to the upside, and then you've just had a smaller bear because now everybody's aware and no one wants to go through the dot-com cycle. But actually what I'm hearing is quite a lot of positive news. We haven't had ETF decisions, but quite a lot of positive news, and countries saying blockchain's not going to go away, and institutions announcing they're doing on blockchain, but Bitcoin's not going anywhere, and the crypto market really isn't going anywhere. What we want is the final twist of the knife, absolute morbidity and despair, and a sell-off, capitulation. Get it done, sell-off. Then everyone, all the journalists go, oh, and another major hammering for Bitcoin. Everyone starts talking negative, and bottoms are made on negative news when you no longer go down. Not when everyone's trying to create positive news and you can't go up. That is why, fundamentally, emotionally, psychologically, I'm still in the bear camp. Despite saying anything can happen, I would say bias bear in this instance. People are always too soon to call bottoms. Let's drill down into the shorter time frames. So here we are daily. Now I did this for Ethereum, which I shared on Twitter for free view as well. And I'll show you it again in case you missed the tweets. If you aren't following me, I'm on the Crypto Sniper for just crypto stuff. I'm on the Market Sniper for all technical stuff and other traditional markets. By the way, it does start to matter when Bitcoin is flat what the dollar is doing. It's a pair. You're comparing something against something else. And let me tell you, the dollar has been ripping like a loon up and down on against the euro and other currencies. So you might want to know and start watching that. That's the power of what we do. We are not just in a crypto bubble. We recognize there's global liquidity as you need to be a global hedge fund macro investor, and you have coins and you need to put things on certain areas. If money is flowing out of crypto and into something else, it's going to be real hard, even if you've got a great token, to pick it and expect it to pump. If you pick the right area where money is currently and the time that money is flowing in, even an average pick will often do far better than a good pick in a deflating area. It's quite simple, and that's the global hedge fund manager. There's a certain degree of liquidity and it's flowing. Where do you understand that it's flowing to? Are we in a commodity boom? Are we in a dollar strength boom? Or what asset classes are moving, etc., stocks, etc. So it's really powerful to do that. But look at this now. We call this big fat line, which I prepared this chart for you on the grind line. You'll learn a lot about grind line theory on a program and a course. But this aside, which way does it go from here? You can tell it's squeezing in volatility. I put the pretty in pink line in there to highlight the squeeze that's come down from up top here. This is logarithmically scaled chart, so it might vary if you try to replicate this draw on your side. And I've also circled an area here where you got a similar, on a much more micro scale, a similar structure, but a fractal of it, where it actually pumped up, and we've said, hey, there's always that risk. But this was in a highly volatile period. You just had a major inverted there that crashed and had done an amazing sell-off with overperformance here. Boom, it spiked back up really strongly, came down not quite as strongly with a bunch of pushbacks along the way, and then sat in our soft floors. I spoke about the soft floors, 7,000, 6,800 key levels. Look at that 6.8, the neckline on a left shoulder, head, right shoulder, break to the upside, target made, rollover, back down. You can remember that. This fractal over here actually surprised us. I got a bit short squeezed here, lost on that trade. We don't only win, we were saying you could wind up for the break for a new low. We were inaccurate and we were wrong. So, but because we have managed stops and we have tight funnels, we took our losses like big boys, and it's natural and it's part of the game of trading. Forget always being accurate. It doesn't happen. The key is what you make and what you keep and being selective. It was a key moment when an impulsive move was due. It just was 180 degrees the other way to what we expected. Could it be the same here? Yes, it could. Do I feel it's likely? I feel less likely. In other words, I'm going in again. On my YouTube channel, everyone, if this pumps up, we'll go once again shorting the lows. I'm sure it'll happen. I'm okay with that. I don't play for the peanut gallery. At the end of the day, taken and made more in trading this market than probably those people that are commenting in that way. So they come from a low space. But when we look at this up, lower low to the previous high, and to that previous high, we had a lower all-round low to that most recent low, and it was lower than that. We got a little bit of a falling wedge push up, so this was quite strong, but it couldn't take out the high. I said then, and I repeat again, you haven't fully made a new high until you've run the 11.8 or you've run the 9.9, and nowadays we say, you know, we'll start thinking about bear at the 8.5, and the next warning, the earlier warning of it was when you can get above 7.4. Has this shown any capability of even running the previous high at 7.4? Is this momentum impressive to me right now for even just beating the previous high that are all coming down from previous highs and are stuck in the soft floor and the hard floor zone? We couldn't stay below the soft floor for very long, and we sat in the soft floor a little bit longer than we sat down here. Plunge protection arrived. All the buy the damn dip guys boarded up here. They came, they took a little bit longer to assert their influence here. It didn't go as low, but it spent a much longer time. Go throw your volume by price. You'll learn how to use it on a course and a program with us if you don't already know. It broke eventually, had less momentum for upside. It then comes, smashes through this impulsively, the first time impulsively since that, and that had a V-shaped recovery, no V-shaped recovery, sustained period from June all the way through to July, virtually a full month, just to form a reversal and testing The hard floor, as the only other time, was on your V-shaped collapse over here, which you got electric fenced away. Now you're spending more time there. You get your rally, you make your reversal target, and you fizzle. You fizzle, you don't come part the way back, you come virtually 90% of the way back, and you test that same hard floor again. Where is the follow-through buying? Why are we not getting real follow-through buying? Why are we having 95% retracements after a reversal makes a target? Because it's not yet ready to be that trend. It doesn't go from bear binary to bull. You actually go into a consolidation and a squeeze. You're getting low volatility. That means a high volatility, highly expansive move is coming and is not far away. Look in the space in that triangle of what's left. There's an event that is due to occur. Could it be up? Yes. 1 in 3, I'd say. I'll be coming up and say, hey, it was an up. I was wrong. It seems the 6 and 7 hard and soft floors have been really well defended for now. Does it really change? We first need the first warning that it's no longer a bear. That doesn't mean bull, but that we're in a consolidation period. We need to start taking out some highs. We need to take out 6-8. That will be the first trigger. Potentially, a bit of a stirring. Doesn't mean it's bull. It might mean the beginning of the end of the bear. We take out 7-4, a stronger case for end of the bear. We can take out 8-4. We've got a real case that now that squeeze has now resolved itself. It's not a breakdown, and we're no longer in a bear market, but we're not necessarily in a bull. We could be early bull. We could just be in a bit churn. After you run that, you can come back down and support again on the 6-8. You can mess around. You saw that period on the 2014. That's the useful bit on 2014. It doesn't have to give you exactly what happened in 2014. I'd almost bet you that they will be different. When people look at the big pictures, you say, yeah, you see the same. I say, no, actually it zigged before it zagged there. It dipped before it dipped there. The distance between that low and that low is not the same. By the time you do a proper geometric analysis, you'll realize that it wasn't the same. It just looks the same on a big chart when there's bottoming, if and when that occurs, if it is a bottom. Overall, this grind line tells me I'm more likely to bias to the downside. But what could we say for the bulls? What can we say for the bullish case? There is something to be said. This had a little bit of a strong candle there, but it gave it all back. This had a little bit of a strong candle, took a long time to come back down. So there have been a little bit of little bumps, very low volume, not great significance. This throwdown was hugely fast. Not massive volume like it was at the buy the damn dips, but it was very, very fast. So this is where we are. You're being squeezed between the pink and the red, and one of them will go. You can decide for yourself. When it goes, I expect it will be impulsive, even though it won't necessarily mean that it doesn't come back down part of that way if it's impulsive. If it breaks to the upside and it undoes this level, you might then have a rest, and it doesn't mean it's going to follow through on bullish, because as yet we've not had the follow through on any of the bull moves. We've not had it. We made lower lows. So it remains to be proven that it's done with that. So I'll bias to the bear side generally, but I won't be shocked if it breaks to the upside, and I'll have my money management in. Let's just show you another point that's potentially bearish, but is actually mildly bullish in some ways. I've put this Twitter chart before it broke. I said it will break here. It had the hammer, this grind line. Ethereum has actually already broken it, and now it's having a little base. I said there's a scope for, it's since caught up, I haven't seen my scenario, a little bit of a rally here, and then maybe it can accelerate. This is not an ape, mad, hectic, violent break. So for them, it's kind of bullish. We traded that trade, that little mini inverted HVF we sold on the grind line. Yes, we did, sir. That was a great entry. We don't always have great entries. We don't always get it right. But we sold that, and straight away you went strongly into money. Had I been trading that, which I haven't, that's a small little move into the money. You would still be into the money, but it's not the spiller and thriller from Manila. It just isn't. Not yet. So, it's not yet ready. Probably because Bitcoin, the boss, is not yet ready. But if it becomes ready and does what it could do, that little rally could be stumped on, and you could be heading down south real briskly. Okay, so we've watched this also on shorter time frames. I do regular updates for all my guys. I was highlighting the soft break, the hammer plunge buying, the convexity of the pattern. You'll learn about that. We did essentially trigger what we call a soft bear flag, which is an early warning recognition. We value being early, and this is before the real break, a little bit of an indication. So we flagged that. Big spill, we flagged that as a channel. Up, up, up she goes. You split the middle. This high failed to take out that high. Could it be an upsize squeeze that primes to break higher? Didn't like the sell-off and gone very convex, highlighting the descending grind line, and it's been broken to the downside. With it, you've got a small amount of hammer support on the channel, and you've let go of the channel. So I already have small shorts with more to be taken out on the downside. What would be very painful, sell off initially and then a turnaround and pump. Can happen. Be careful. If you're not trained and you don't know how to manage for that, and you haven't come on a program or you don't know what you're doing, don't just take trades on what you're seeing here on a YouTube channel. OBV is lower than previous highs, as you can see there. It is lower, although it recovered reasonably, not looking particularly strong, and also its sell-off not particularly powerful. This is highlighting the low volatility in this bear flag channel. It is a long channel, given the sell-off. The spike down to the extreme low was very quick, and you've had a long period of channeling. We talk about inverted HVF. The gift is a flagging like third impulse. That will mean nothing to you. But you'd learn about it on our methodology. So here's where you're at. Bets, bias bear for me still. And this is where we are on the slow time frame. Also, huffing and puffing, rising wedge, popped out, small upside HVF here, target just made into a rising wedge, roll over, and then you've got a fractal like the Ethereum short, which I showed you there on BTC. This was a great in the range trade that we took short. You see, if you're just a hodler, you've lost an immense amount of money during this period. That doesn't mean we're getting all our trades right. I have to tell you, it's been challenging for everybody, but I've taken money back on the downside net. Not everyone a winner, but net. So I've got something out of the bear market in this devaluation. That's very, very useful. You retain value if you're adding on a P&L, and we've sat in fiat while a lot of the devaluation has occurred, and we've taken net to the short side. Number of trades, 6 digits sums that have been done, and no matter what trade size you are, on a smaller level, 4, 5 digit size could have been taken. Really good runs with managed risk. So that's the key message that comes out. Okay, so tonight, 19:30, I will tell you which coin could in fact fall all the way down 2/3. This is BTC. This is my take. We assess it as a bear, and we've also had some great trades on FX. A lot of good stuff going on in our environment on equities, our setups, each with multiple time frame assessments, 360-degree analysis. This is how we post our recommendations. I mean, oil was a recent one that did really, really nicely. It was posted on Sniper Circle. I should, in fact, update that. Really easy to post and update in our platform. So there's actually been some good and exciting trades. Doing a number of very interesting things in the market and watching BTC because the day is coming. While I'm grabbing that oil chart, just have a look. That's not the one. Let's try Euro USD. Because you've got to remember that you've been modeling against the USD. Big strength period in a channel for Euro. A top out squeeze there. Sort of flat triangle. Lots of big selling wicks at a key round number. Lots of selling wicks. You let go of the platform and you spill. And that was a big sell from 117, came down to 115. So you've got to also bear in mind your Euro chart BTC will look different, will look more buoyant. Have a look at that. Hey, if you're in the European group or the pound area, have a look at your BTC against other currencies. These things are not static. You've got to remember it's like pair trading. especially when the crypto is very quiet. Normally it doesn't matter. If crypto is expanding, it doesn't matter if you're in dollar, pound, euro, yen, it's all upside and gravy. When it's very low volatility and tied to a dollar, you need to take into account your local currency. That matters to you. Okay, good stuff, guys. I'll show you how we update our WTI. So this is our general markets here. I will also mention that we've got a small number of final seats for a free micromentary series of videos that will introduce elements of what we do in our program. You can come and have a look at that. It is going to be delivered to you in your email box. There's a couple, think of 100 seats that we've made available. There are around 27 left. So if you go and you reg, I'll pop the link in here. I'm updating. We've got a nice WhatsApp-based style here for how we communicate. The TradingView charts will load in full there. There's a lot of chat in the general aspects and on the individual setups. You will be able to be part of a community where there's quality setups. We're not a trade feed, but there are quality setups, quality ideas that are created, shared, and you can grow and develop. You've got to realize this is a journey. Trading is not easy. You get differences in markets. What worked in one period stops working. You have to be able to adjust, and you have a method for assessing that. Okay, see you at 1930 if it suits and if it's of interest. The rest of you, that's my take on Bitcoin. Enjoy the vid, share and rate if you want. Otherwise, just don't. And look forward to seeing you later. Enjoy yourselves. Okay, bye for now.